specific metals. We have the largest silver discovery in the last decade in Bolivia. It's a silver-only asset, so it's it's leveraged to the silver space, and how that impacts the question that's on everyone's mind today, or being asked today, is, how has COVID impacted us? How is the new vaccine going to affect people's behavior and business in the metals market? My answer to that is
the perspective that everyone knows from time immemorial there have been feasts and famines. And the precious metals companies have been through a 7-year famine. 7 seems to come along quite a lot. We're talking 777 here, 7 years lean, 7 years plenty. We've had a famine of investment, and the subsequent lack of capital has not allowed us to prosper and grow our companies. We were surviving for the last 7 years. In my and many others' opinions, the famine appears over, and we believe that feasting by investors in everything precious metals related will start to assert itself, and it will be a time of growth for all of us.
And this is very important for the mining industry, is currently the environmental and social issues are at the forefront of people's minds. So I get a lot of questions from people saying, do we need to keep mining for more minerals? And if so, how do we mine responsibly? And all of you would have had to be dealing with this now. So there's currently a significant rethinking going on by mining leaders. They believe without such a 21st century mindset, mining is in trouble and will not attract investors. Investment groups, just Price Waterhouse, BlackRock, and others are warning that investors, and you've seen the letters from them, I'm sure, they want to see that companies are committed to help solving problems of global sustainability.
May have discovery to production agreements. I mentioned these earlier in the talk, and really that is essential in managing risks and aligning interests and expectations of all parties. It streamlines the task of advancing a project from discovery through to the potential development of a mine. And I think, we're a small junior gold exploration company, but I think, you need to think ahead, you need to think big, and you need to really integrate structures like this at a very, very early stage. And so, this makes it easier for all parties, including future investors, to have an understanding of the requirements necessary to bring this project through to fruition.
There are some supply side concerns with platinum and palladium. Most of the platinum group metals are mined out of South Africa and Russia. Both markets are not necessarily friendly to the Western nations, or they may have issues with supply. Specifically for South Africa, there are political issues there which have interrupted some of the supply chain for the metals coming out of that country. And then from Russia, particularly the US and Russia don't have the best trade relationships, so sometimes hard to source platinum group metals from those countries. So there are a number of miners that are out looking for platinum and palladium deposits. There are some significant deposits that have been found in Canada, as well as various areas of South America.
As the 21st century opens, mining and miners are reeling from the resource curse, noting that societies and investors' tastes are starting to sour on the sector. Enter our protagonist, and I'll call them ESG, though I'll mostly discuss the S here, because until this year, the E and the G were the primary focuses in the ESG sector and the analysis, but the pandemic and the issues brought about by social justice and the economic shocks are highlighting the value of the S side of that triumvirate.
It's not a perfect correlation, but it's very close correlation. The line in red is the U.S. debt, and you can see that the gold price usually stays mostly around the debt level, or in periods of crisis overshoots quite a lot. Right now, it seems to be if we take 1,850 to be about where it should be compared to the debt. but that's not enough.
Degree. I like the debt to gold ratio that Don talked about. I talked about it earlier, but Don obviously expanded on that. And I think that when people are looking for value right now, even though the markets, the general market itself is in malaise, I think that they look toward the stock market when the financial debt situation is so dire. So trying to find a store of value, particularly in our business, in the precious metals business, is that money that money or those funds are flowing to precious metals, which lifts the stock market in our sector.
Sure. I think the stock market tends to get inflated when we have easing policies at the central banks, and there's a lot of cheap debt available and a lot of money printing by central banks basically around the world. That tends to inflate risk assets like the stock market. So I personally, I got out of the stock market years ago, and I don't look at the stock market as a bellwether of the overall economy. I think it's actually now a contrarian indicator. So I think the underlying economies are not healthy across the world. I've been very vocal about that. Stock markets eventually will come back to earth. They always do. They always revert to mean. They generally happen every 4 to 10 years. We're now in the longest stock market bull in U.S. history. That's not going to last forever. It will revert to mean. Where you want to be is, in my opinion, in the precious metals and the precious metal stocks, which I believe are all undervalued relative to the stock markets.
It's interesting, Gordon hit it a little bit and so did Robert. I tend to do things in a simplistic way. There's too many people running around with their heads chopped off, chasing dreams. And dreams go out the window the moment reality hits. And when reality hits, they come down to what's going to keep me alive and surviving for the coming days. And it's not paper and it's not technology. It's going to be, in my opinion, precious metals that are going to keep people safe. So we have Robin Hood and things like that out there, and you've got these people who are playing around on the market, as well as you have some serious players offloading a bunch of paper.
Yeah, no, I was just saying that those are all I think thoughtful and worthwhile comments. Mine would be that in the short term markets are a voting machine, and in the long term they're a weighing machine. The old Ben Graham dictum, and I think we've seen a dramatic response to markets at the outset of this pandemic and the recovery as stimulus came in, pushing markets higher. I think that people have tried to look through, and maybe we have had a bit of an overshoot on the upside in the short term. So right now I feel like we've moved quickly, we've moved aggressively, and we've seen prices discounting a recovery. So I think caution is warranted at this stage in the move.
The evolution of since 1970, since collapse of the dollar gold standard, it goes up almost positive correlation 100% with corporate profits. Between 97 and 2000, during the bubble, the tech bubble, where the Nasdaq went berserk, the dot-coms were worth $1 million, and they were predicting that it's going to be the price of a dot-com, that it's going to be something like $1 million. And when I went to visit that company, they had only 2 computers, and they were designed for investor relations to impress. And that's when I realized that it was a real big bubble.